Thank you for joining me on this video. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Today we are going to be doing technical analysis for the S&P 500 for Wednesday, March 4th, 2020. And we will be using my stockcharts.com charting service, of which I am a paid member, and I will leave a link to their site in the description box below this video. The first thing I want to point out is we had another massive update today, up over 4%, 4.22% on the S&P 500 today. And, first off, guys, these 4% rallies are somewhat unusual, and I always look at them, with suspicion. So be cautious here, because generally these big up and down days are followed by more big up and down days, right? So we'll have to see over the next couple of days, but up 4.22% and closing over 3130 on the S&P 500 for today. Now, this is the same chart that we were looking at last night. So this is a 5-day 30-minute chart. So each candlestick represents 30 minutes in the S&P 500. And if you saw last night's video, you know that I was talking about the fact that for the previous sessions, the previous 4 sessions up till today, we'd been trading below or around that 2860 on the low end, as you can see right here, and then around that 3100 on the high end. And I mentioned that any close above 3100 would definitely be a positive. So we had our first close above 3100. We'll have to see if we can get some follow through over the next couple of days. I definitely want to see us close 3 days in a row above this 3100 level, and that would definitely be positive. But let's kind of zoom in here, and now let's take a look at that same 5-day chart, but now we're looking at a 5-minute time frame. So each candlestick represents 5 minutes, and you can see that literally we closed at the highs of the session today. So that is very positive, and of course a little bit of a rally, with volume into the close, so that's a good thing. And you can see from yesterday around 2 o'clock, we can actually even probably draw a trend line on here. Let me just do this really quick. Just kind of caught my eye that we have kind of a short-term rally going on here. So we could even kind of draw a trend line like this, and hopefully we can maintain that trend line over over the next couple of days. But that would definitely be a positive. I'll get my charts the way I want them here. But you can see that trend line here that, from really around 2 o'clock yesterday afternoon, we've been rallying in that nice little trend line, that trending pattern from, on these 5-minute charts. So, I'll leave that in there for tomorrow. We'll have to revisit this and see if we can maintain that trajectory. Again, these 4% up days, I look at them with suspicion. But it could be nice. So we'll just have to take a look over the next couple of days and see if that'll happen. Now let's pull back and let's go to a 1-year, 1-day chart. So each candlestick now represents 1 day of trading in the S&P 500, and these are the same annotations that I've had on this chart for the last couple of weeks here, guys. And of course, this is where we closed last week at the low, and then around that 29.55 area, and then this is this week's trading, so Monday, Tuesday, and Wednesday. And again, you can see, big up day followed by a big down day, and then followed by today's big up day. So again, I just would caution you here. The good thing is, we're well above this 200-day moving average now, the gold line, and we did finally close again above this 3100. So if we can get a couple of 2 more closes in a row above this 3100, that's going to be extremely positive. So we'll keep our fingers crossed. But to me, it looks a little suspicious. These type of markets generally don't bounce back this quickly. But yesterday's 50 basis point cut by the U.S. Federal Reserve definitely helped. And again, on a relative basis, bonds are pretty darn expensive these days, and stocks, I think, are definitely the better value. The question is, in the short term, are we putting in a V bottom here, or are we going to back and fill, and is it going to look more like this down in the August time frame, where you get a few big up days followed by some down days, up days, down days, where we kind of traded in a box back in that time frame. And for my Simple Market Signal subscribers, I was talking to them back in August, talking about how we were trading in a box like that. The other thing I can tell you is within my proprietary model for Simple Market Signals, the model is still negative. Okay, the trend signal that I have in there called the early bird indicator, it's still negative, and so I have a trend component and then I have a risk-based component. And even though from a price action standpoint the market is looking better, Simple Market Signals takes a much broader view of things. We don't just look at price action. As a matter of fact, that's a very small component of the model itself. And so Simple Market Signals and the proprietary model picks up where traditional technical analysis leaves off. And that's why I know, because I've been using it for years. It finally came together in 2017 after 20 years of me working on this problem. But it works, guys, because it's dealing with systematic risk, which is something that hardly anybody understands, that hardly anybody talks about. And in this super low bond interest rate environment, guys, I'm telling you, the game has changed. So this isn't your father's stock market anymore. This isn't your grandfather's stock market anymore. Things have changed, and especially over the last 10 years as yields have continued to come down on high-quality bonds. High-quality bonds are no longer in a position to offset equity risk as they used to. So we have to employ our own risk management, and I'm talking you and I as investors and traders. We have to employ our own risk management system, and this is a system, Simple Market Signals, that can really help you. So I would encourage you to take a deeper dive and take a look at Simple Market Signals, because it will really help you. And by the way, the service, guys, is less than $20 a month. Okay, so I've made it so affordable for anybody that wanted it. There's no excuses, and I really want to help you guys, but you have to subscribe so I can help you at the ultimate level. I appreciate you being on this video with me. Check out the video that's going to be queued up at the end of this video, and I'll see you tomorrow. If you would like to learn how Simple Market Signals can help you become a more successful investor, trader, or financial advisor, you will want to watch the video introducing Simple Market Signals, which is on my YouTube channel. I will also leave a link to that video in the description box below this video. Thank you for watching. Don't forget to subscribe, and please give me a thumbs up on this video, leave a comment, and I look forward to seeing you in the next video.